Good afternoon to crypto and Forex Lens subscribers. Welcome to today's session. It is quite a warm and humid day out on this Thursday, the 16th of August. Hard to believe. Sorry, I was just making sure that my audio was coming through okay. Yeah, man, it's humid out. Right. Let's get on into it. I mean, we've had some pretty interesting moves in the broader markets. We're pretty the sisters, the S&P 500, the Dow, and the Nasdaq are kind of in a funk, moving in different ways. So the Dow is doing really well today, and the Nasdaq is doing okay. And so I mean, it's 0.5%. It's pretty nice. And then we have the S&P 500. It seems like it's doing okay. So equity market's all right. Gold is actually sitting pretty flat right now. And our cryptos are continuing to move quite a bit. We're seeing a lot of the altcoins do a bit of a drive. Now, if you remember, last week and the week before, I talked about a couple coins and how they were in prime position to have a big breakout because they were definite laggards. And that was Nano and Walton Coin. And actually, Walton Coin still is I'm hanging on to mine still. I'm not ready to take profit. I've taken profit on Nano. I haven't taken profit yet. I haven't taken profit yet on Walton WTC. Those coins have been doing very well. Then we look at Cardano, it's sitting pretty flat. I mean, not a whole lot to write home about here. We have not really moved much. A lot of the reason for it, just looking at the market geometry itself in this respect, it's not in a lot of responsive angles until we move forward in time here. I mean, we might have to wait till we get into September before we would see a nice drive up. But looking at the daily chart here, we do have a very nice bullish pivot formed yesterday. And then really we just kind of sold off all the gains that we had made and closed just a little bit above the open yesterday. And we're really repeating that today while we are still up. We are not very far up in Cardano. Taking a look at Bitcoin, the big one. We've been talking about this vertical line here, this red vertical line. That is a pivot in time. We've been discussing that is a zone to look out for, and then that those vertical lines act as those time cycles. Those act as a resistance in time to the trend in force. Okay, so it's very common for the mid, the 2, the 6, and then the new beginning and end of a cycle. It's very common as price gets to those zones that we would see some type of minor or major trend reversal. That's exactly what we are looking at right here. In fact, on a longer term time frame, we may, if I were to just take a brand new chart of Bitcoin, we may very well be looking at this would be a very generous representation. Might have to see it on the weekly. It'd probably look better on the weekly. We could be looking at a ugly head and shoulders, inverse head and shoulders pattern. Depending on however it wants to form. The rules of the head and shoulders pattern are not violated because both shoulders are still lower than the head. But this could very well be a pattern that we see play out. Just be aware of that. This is on the weekly chart. been looking at, and the thing again about a Head and Shoulders is that they are the most, one of the most profitable patterns. I think Bulkowski said it was the most profitable pattern after a diamond pattern. But Head and Shoulders patterns, they show up quite a bit. They show up quite a bit because you have a series of triangles and wedges forming in there. They're just a very common pattern. But the thing about a Head and Shoulders pattern that a lot of people do incorrectly is they draw it out like this and then they trade like it's going to go in that direction. These are one of the most common and most profitable setups, but they are also one of the most rejected setups. And a lot of pros and a lot of funds know that, and sometimes they will get people trapped right at the neckline, where you get close to the neckline or you peak above it here just a little bit, and then you'll see price action reverse where it won't complete. So again, I'm going to preach this, that a Head and Shoulders pattern is only complete when price action has completed the pattern. And then a lot of people, and I've been burned so much in the past about with Head and Shoulders patterns, trying to trade in the direction that it's going to go and then complete. That's like chasing straights in poker or flushes in poker. So as we move up here in this price range, if it were to break out, I don't know if I would actually trade the breakout myself. I want to see a pullback. You know, it would really suck to miss a breakout on something like this and then it never has a pullback. But generally, a large percentage of the time, and I don't remember what it is. I'd have to look it up. But a large percentage of the time, you'll have a retracement on a pullback here. So just keep that in mind. All right, now let's pull back out here. Let's look at the weekly. This is my own chart geometry. This is using the law of vibration, along with the Gann squares and his arcs inside. So go to the daily. Oops. One thing TradingView does very well is it's easy to draw in TradingView. Other pieces of software, I don't know, it's just not, it doesn't flow as well. Like, well, Market Analyst flows pretty well. Motive Wave does. Ninja Trader's god awful. But yeah, there's a lot of software that doesn't work very well. But I'll tell you, for what TradingView lacks, because it does lack quite a bit of things that I'd like to see in it, it does make up for in the sheer amount of things that you can have in the market to watch, and then the drawing is so simple and very, very responsive. So that's why I like it. So looking at Bitcoin's chart here, we are experiencing a pretty nice base forming around this zone. You know, we have traded for the last 1, 2, 3, 4, 5, 6, 7 days in this range. We've had prices throw down. We've had prices travel back up. We've had what they call the altpocalypse. There is a lot of stuff going on here, and the thing to look at here is that's the 7 week cycle, 45 to 49 day cycle. I don't remember if we talked about this on Monday or Tuesday, but the 45 to 49 day cycle in Gann's work is it's called the death zone. It's where blow off moves stop. It's where you often see very, very quick changes in trends, especially if there has been a swift move in one direction. And we have had that. We have had a very swift drive in one direction. We've had price, you know, consequently there's a time cycle in here I didn't put in here, and it's actually in between these two. Oh, perfect. Yep. So the 7 week cycle, or sorry, the 7 day cycle, 49. Oh my God, 7 is an important number in Gann's work, and we have a 7-week cycle that is completed. We've had a swing low followed by another swing low. The behavior after the 49-day pattern here is to actually see a counter trend, and that would be trading to the upside. So just going from this market geometry here, there's a lot of support for the higher prices, something we've been talking about the last week and a half or so, that we should observe a rise. And there certainly is a lot more money that has flowed into it. If we look at CoinMarketCap, when we were talking on Tuesday, I believe we were down to $191 billion market cap, and now we're at 207 billion. So what this is looking like is a nice support zone. Is there a scenario where we could see prices lower than that? Sure, but really we seem to be forming some type of a base. Yes. This is a sloppy, this is an ugly trading conditions in here. This is just the ugliest looking thing ever. We have a clear head and shoulders pattern. It did not break down. It actually got bought up. That's pretty bullish to look at. We keep making higher lows, but we make lower highs. What we are essentially forming here looks like a bullish. Well, we have like a bullish flag. The shape that we're looking at is one that I like to trade against. These show up all the time. This is just a triangle or a wedge. Some people might say that this is symmetrical, and it doesn't have to be exact. Okay, there's a difference between a rising wedge and a falling wedge, and it's really one of those things where you just look at it and you can tell what it is. This kind of falls into the neutral category, bordering on maybe the falling side, but Bitcoin, for whatever reason, loves to maintain triangle patterns throughout its range that it trades. I mean, they just show up everywhere. We had a rising wedge over here. Okay, and then in rising wedges, they have a bias of moving down, because they're essentially a rising wedge is just another name for a bullet or a bearish pennant, and a falling wedge is just another name for a bullish pennant. And so how you would read a symmetrical triangle is depending on what was the trend before it. So we're looking at an hourly chart. We see that we have had a trend up. We've had a short-term trend moving up on the hourly. Where did the triangle form? Off of a bullish move. So the highest probability move here is that price action will start to trade above it. One of the things that's indicative and kind of a warning sign that there will be a breakout soon is, and this is totally normal, is in triangles, volume decreases as it gets closer to the cone. So as we get closer to the cap, as soon as we get to the cap, cone and cap, as soon as we get to the cap here, that is, really just, we should see volume get slower and less as we start to move. So that's something to look out for. In this type of chart construction right here that we're looking at, this is called a square of 144. And I'll go to the 4-hour chart. Gann had a rule, and it was his rule of angles, and he states that whenever price breaks an angle in one of his squares, it will move to test the next one. And so what we saw here is price broke and held below this Gann angle, and it moved to test the next one. I mean, look where the buying, if you've been with me and with us over the last few weeks, you've seen these charts. You can go back and watch the videos. I have not made any adjustments on these charts. And as we've been trading, I mean, I've talked about how the market geometry is the best representation of how to look for things to trade and how a market will form itself. I don't know of another way that you can properly forecast in the short term and get an idea of where price ranges are going to be. So this is what's worked out best for me is well, yeah, if you hear some banging and stuff, because contractors are here. Looking at this chart here, we have price broke above this angle, and we've remained above it. So the behavior is for it to test the next angle above it, which is right here. So as price moves higher, it needs to test this line up here. Now here's the yucky part, because we try to think of all of these areas that form like a shape or a pattern with these squares. Let me just use this as an example. So if I had a Gann box, okay, sorry about that. If I had a Gann box here, and I was taking the tool here to kind of highlight an area, I've got to do this here. And I want to highlight this to be like pink or something. And make the line wider. So what I'm trying to say is that the space in the angles is an area you want to pay attention to. So like prices will like to trade within this box here, or they'll like to trade in this little area, or they'll like to trade along these channels. And so that's just kind of how you view how to look at it. So if I'm looking at this chart here, where do I see price trading in? Well, there's a whole lot of area. It's in this entire box right here. That's where I see price trading in. So prices could rally up to 7,600, but then fall all the way back down to 5,400 before bouncing back up again. This could be a pretty wild ride in this entire section. Ideally, we would like to see a nice drive higher and to get back above in this upwards channel here. But we'll see. We'll have to see what happens. It's not surprising that we are in kind of a no man's land, because it's just one of those things. Don't think of the angles in Gann's work as areas of support and resistance. I mean, they do act as that, but they're more like areas of momentum. And as you get closer to one, you should see an increase in volume and an increase in volatility. When you start to go away from them, you should see some kind of, you should see a lot of ranging markets. You should not see a whole lot of activity. Or if there's a whole bunch of them kind of compact, if there's a whole bunch of angles compacted in kind of one area where it's not, I mean, it just looks really jumbled, then you may not see a lot of movement either. But what we see here is we're pulling away from these momentum angles, and there's not a lot of structure in front of us. It's difficult for price to trade. It's a hard area to trade because there's nothing really in front of us here. But looking at it from this view, which I have been taking extensive notes every day and trying to figure out which type of market geometry Bitcoin responds the best to. Is it the law of vibrations? Is it a square of 144? Is it a square of 52? Here's the square of 52. On Bitcoin, here's a square of 52, which is just a 52-week cycle or a year cycle. You know, does Bitcoin like to trade this more? The thing I like about this chart is that 45-degree, excuse me, the 45-degree angle is acting as a big resistance zone. So I don't know if Bitcoin responds more to this kind of a chart or the 144 or the law of vibration. And I think I even did one with the Gann's square of 9 levels, square of 9 angles. So if I go to the daily on this one, that's the euro. Oh, I didn't do it on Bitcoin. I was working on it, but Bitcoin's square of 9 value areas are pretty easy to plot. They're fairly standard. But yeah, it's market geometry is a fantastic way to trade a market. And for this, do you think BTC will start trading sideways? It always does that before a big move. Yes, and you know what? Everything trades sideways before the next trend. That is just how markets move. Charles Dow was the first one to kind of identify that. It's in Dow theory where we have a accumulation phase, followed by public participation, followed by distribution, followed by panic, followed by accumulation. So there's accumulation, there's a buying phase, there's a selling phase, and then there's a consolidation phase, which is and Bitcoin's chart is actually really, really representative of that. So we could consider everything that happened from 2008 to 2017, May of 2017, to be a accumulation phase. And then we didn't get into the public participation phase until June of 2017. Public participation was all of this, all the way up into November, where we got to the 7,500s. And then we got into the excess phase. This is where we went absolutely parabolic. And then we followed through with distribution. If you want to know where did pros, experienced traders, and funds sell, they sold in these dates. Not that first one, but the 17th, 18th, 19th, and 20th of December is where the distribution of the market happened. And then we followed with a panic phase. And the panic phase is, depending on how you want to read it, is over and has been over. And we are just in a consolidation move now. We've been trading between 8,000 and 6,000 really for quite a while. So this is like on a long-term market, this is a very, very this is a textbook example of a consolidation of an accumulation phase. And the one thing you want to look at when you look at an accumulation phase is you want to look at the volume. Because if you notice, if you have like a volume average on there, like there's orange line here in the volume, in a consolidation move, let's see a market that might have better data to look at. Let's maybe look at the euro. Maybe this isn't a good one, but no, it's not a good one. Look at it on the hourly. Maybe that's it. Well, what I'm trying to say is you want to notice the average volume, like a moving average of your volume indicator. If that is flatlining and or trending up, that's your early a warning signal that a move is going to happen. And then as far as, where does that move go? Which direction does it move? The general rule is it will move in the direction of the prior trend. That is the general idea. But of course, in most modern market theory, we view all markets as something that grow in value. They don't just disappear. So we have a ultimate long-term bias of a market that gains value, and that they will eventually recover losses and move back up. That doesn't happen with individual stocks, of course, but with markets as a whole, they tend to always trend up. So, and who knows how long markets will be out there? If we record markets for the next 1 million years, then 100-year cycles will seem like a 1-minute chart in that kind of analysis. So who knows? But looking at Bitcoin currently, you know, this has got a very nice kind of rounding bottom happening here, and it's right on this time cycle. We have this clear divergence that has existed for a few days now. We've had these deeper lower lows made in price, but our slow and fast oscillators continue to start to trend higher, and we are kind of getting to a point now where the buyers have been overtaking the shorts or the sellers here, and it's the more we stay flat and the little bit higher that we go each time, the harder it is for people who are short to maintain those positions and eventually get into that short rally, followed by just another big move higher. So yeah, there's head and shoulders all over the place. You could draw them for bearish and bullish actions right now. It's just when we're in the bottoming part of this, we just have to be patient. And ultimately, as I was saying this yesterday and the day Wednesday and Tuesday, the ultimate down move area and zone that you would be looking for is this 50 is the 5,000 area or the 5,600. If I'm looking at the arc here, prices don't like to stay inside these arcs. All right, these arcs are generally treated like a resistance zone, not resistance like, I mean, they do act as support and resistance, but the activity is generally short-lived inside these arcs. It doesn't like to just sit in there for a long time. It likes to get out of there. I try to think of them as short-term breakout zones. And so we could see, actually Ethereum's chart is kind of interesting. It has followed the curvature of the contour of this arc for a while. Ever since the 30th of July, it has followed the contour of this arc and has found it as support as we've gone down. And then when we tested the second arc here, it found support. And so, you know, we if as long as we're finding support above it, the general rule is I've found is that it will move to test the next arc. Just like we test angles, it'll move to test the next arc. So if we fail to break down below, we will move up towards this arc here. And what I've noticed about this kind of market construction is that when you're near the apex, it seems to give you an idea of where we're going to go depending on the breakout. So really, this isn't like a rocket science thing, but if we're below the halfway of the circle, we should observe it trending to break out lower from each of these arcs, which we do see. And you can see that the trading zones get wider as we get wider. Ethereum on this chart, looking at Ethereum's chart, we're at the 290 area. This is due for a snapback. I mean, this level here, 361.75. This is a weird market aberration. I have not seen this happen actually was looking back on any market where it went to its major 2/8 harmonic, which is that red horizontal line there, the thick one in the middle of the screen. I have not seen an instrument come down to that and just trade right through it. I have not seen that happen before. That is very, very odd. And so when it does, though, we usually get a pretty violent snapback up to that line at least. Whether it goes up and beyond it, I don't know, but it's very strange that we got price to just kind of throw up in price through it. That's not a very common occurrence, and it's very indicative of what's of a false move, especially as we've gone lower here. The volume has increased, and volume falling on, or prices falling on increased volume is an imminent sign of a reversal coming in price. When prices initially fall down, when there's an initial sell-off, you should see the volume be pretty heavy, but then as it goes on, you should see it kind of taper off. But then as we see volume rise while the market is still finding a bottom or goes even lower, that is telling us we're finding a bottom pretty soon. I think that this chart's pretty indicative of that. On the 4, we see this big volume collection here. If we move to the daily, it's probably a better example. Yeah, this is just a beautiful example of volume. We see right up here, if we look at the prices trading at the $820 value area, we see the volume was trending up to there. And then we had heavy selling volume, but then as we got lower, what happened? Volume was decreased, the average volume was decreasing, and so was price. But now there's a saying that is it similar to a capitulation move? I'm gonna ask if you can describe a little bit more what you mean by that. And I'll keep going with this here. The volume is definitely getting heavier as we've gotten lower in price. That is telling us that there are buyers pouring in this market and that they'll find some support. So I like to see that on the daily chart, I see that our composite index, which is like the RSI version 2.0, or the composite index is Windows 10 and the RSI is Windows 3.1. The composite index is in a very, very supportive bullish buying condition, and the stochastic RSI, which is a faster oscillator and more sensitive, it is in a very, very extended oversold condition. Now, things can remain oversold forever and a day, all right? Constance Brown actually said that the default overbought and oversold areas need to be adjusted if we're in a long-term trend, and so like oversold being level 30 in the RSI, that should be moved to something being oversold should be like if prices retrace to 30 on an RSI, then that should be considered the new overbought market. In that, I'm not explaining that very well. I'll figure out a better way to explain it. But what I'm saying is that on this chart here, if we look at it, totally lost my train of thought. Panic selling essentially, stops are being hit on the way down, indicating a bottom. Investors then come in with big volume and start the reversal. Yeah, I mean it's a combination of things. When you eventually, stop runs usually happen on very low volume. Like if prices all of a sudden collapse very fast and it wasn't on high volume, that's generally just a stop run, and it was a one-sided stop run. But when you get to a bottom, or you see prices making new lows and you see volume pouring in, I don't even regard the candlesticks anymore when I see this. When I see the volume, over 3 times what it was the day before, or 2 to 3 times the average, that's all I need to know. I don't care if that is considered a bearish engulfing candlestick. That doesn't matter. All I'm looking for is that volume participation, because what that's telling us is that there are participants in here finally. And oftentimes markets need to sell off just to generate not only new buyers, but people who already sold for profit who want to get back in again. longs who liquidated up in the $800 area on this last swing, they're not probably very interested in participating in any of this area until it were to break the old lows here. People probably bought in here. I mean, we can actually look at where people bought. Yeah, there you go. There's our volume profile. We go from September. This is good enough. But we're in a strong support zone. I mean, this is where if I'm looking at the volume, let's scroll all the way out actually. Here's Ethereum, Coinbase pair. Most of the volume's all the way back here. Let's be realistic and look at that zone. Telling us support's all the way down there, but then from this swing is where we're really looking. I mean, we're sitting in our just below the point of control. If we want to go just from the swing high zone area, we're below that point of control. Ethereum is just structurally, it's in a very strong buying zone support wise. What does it look like from our Ethereum? Okay, well, Ethereum, it's pretty interesting zone. It's actually found support and it's flagging. Definitely see it making a double bottom, testing 262 again. That is definitely something that could happen. This is a good question. Very, very hard to read this. I mean, just really kind of look at the aggregate market, and Bitcoin in general is sometimes often the only one we need to look at. I mean, folks, we will eventually stop looking at Bitcoin and Ethereum as the primary charts because what we're going to get into is finding laggards in the market. Okay, that's the second part of what I want to go over today is finding laggards. And let's just look at, for example, let's look at basic attention token. Here's basic attention token's chart. You know what? Let's do it like this. Here's basic attention token on a 4-hour. Let's look at Nano. Then we've got Walton Chain. And then we've got Cardano. Okay, so looking at these charts, looking at 4 of these charts, they look a lot alike, don't they? Sure. Which one doesn't look like the other ones? One of these is not like the other. Well, I'm going to go ahead and say Cardano. And maybe basic attention token. So Nano and Walton Chain, they have experienced a breakout on their technicals. Okay, without we don't even need to. We can hide all the drawing tools and just look at the charts themselves, and we can see which ones are experiencing a breakout. Okay, even basic attention token in the top left is showing a beginning of a breakout, but we can see Nano is experiencing a breakout. Walton Chain is experiencing a breakout, but Cardano hasn't. Cardano's still in this symmetrical triangle. And so this is what you want to find in these markets. You want to find which ones have not moved a lot. Okay, so WTC, Nano, Walton, Cardano, very nice. see, where am I at here? Okay. All right, yeah. Sorry. I've made a nice return on here. I've shaved a little bit of my position off, not much, but I would expect it to keep doing a nice little rise there. Looking at other laggards, so we see Cardano's kind of a bit of a laggard. What about Ripple? Ripple is showing that it's got a breakout soon on inverse head and shoulders. Monero, same thing. Zcash is a laggard. OMG is a laggard. Ethereum Classic is not. Ethereum Classic is... Actually, we don't want that Coinbase pair. We want the Kraken pair. Ethereum Classic is not the laggard. Litecoin, I think, is a laggard. Yep, Litecoin has a gap down. Litecoin is a laggard. So, searching for these laggards, that is exactly what we want to find and see, because even if there is some type of selling pressure that happens, the laggards will generally, the charts will kind of catch up still. They won't, you don't often see them selling off right away like with everything else. You actually see them catch a bid, so to speak, like people go, oh, well, this one's, everybody kind of falls into it. So that's what we're seeing right here, and yeah, be pretty exciting. Let's see here. Okay. What am I looking at? Where'd it go? All right. Back to here. Oh, the other nice thing about looking at multiple different coins and basing it off of a number of charts is that you don't get into chasing things. Like Ethereum Classic, all right? I was getting so tempted to jump into this guy. I mean, I was really wanting to get into this, but it has, it jumped up a lot. It's really tempting to not want to go into something that has moved up like 18%. I mean, you definitely get into that FOMO mindset, the fear of missing out, and I think a lot of people, even if they know they're in that mindset, it's hard for them to stop. So you get your greed and your fear of greed, your fear of missing out, and your greed they kind of kick in, and you just kind of pour into it when you shouldn't. So Ethereum Classic, I'll get into it after there's a pullback of some sort. I don't want to get into it now. And may I miss it? Sure, maybe. I don't know. I mean, will there be a pullback? Who knows? But if there is, I'll participate in that pullback. But I don't want it. You'll get burned chasing things. Guys, markets have so many opportunities for big moves. Okay? You're going to miss almost all of them. That's the fact of life. But when you see one forming and you see the possibility of one, sometimes that's all that matters. You just need to find that one. If you see something on your screen that is greater than 10% or greater than 8%, don't even look at the chart. Just say, "Oh, that one got away from me. No big deal." Look for the ones that haven't yet. And that's what I do. And so yeah, I'm upset I missed the Ethereum Classic drive because I had sold up at like 18 something when it got up there last week. But what do you do? I missed a big drive up from $10. We've had almost a 50% drive up higher. That's a big deal, but I mean, there's going to be more opportunities like that. So don't chase. And for the love of God, stay away from Instagram, Twitter, Facebook chat, or not Facebook chat, the TradingView chat. Stay away from stuff where people are telling you how excited they are and how much money they made, because it's just a recipe for disaster. Anyways, let's see. The Don't Chase, Finding Laggards, Ichimoku analysis. I mean, there's really not a whole lot of stuff to take a peek at. Not a huge amount of changes. I mean, Ethereum Classic, this is a good chart example of how you would trade Ethereum Classic, where if I want to get into a long, I'll participate in a retest of a test of the baseline. I want to see price come back down to the baseline and test it and see if it'll hold it and then go long. Otherwise, I'm waiting. Bitcoin is actually could be entering into a nice bullish buying condition, but it's just kind of sitting here right now. Litecoin, same thing. I mean, at least it's above the cloud. Cardano could have a nice breakout here pretty soon. It just needs the cloud ahead is green, which is nice. Have to look out for that one. Walton Chain actually hasn't even had a breakout yet on its hourly, so that is still a possibility. Nano definitely has. Yeah, that's some sustained buying in this one. Basic attention token. When price travels back up above the price action here, I mean, when the lagging span, like Ichimoku, again, when price is inside the cloud, inside those blobs, that's when we don't trade. We also don't want to enter a trade when the lagging span is inside the price when it's inside the candlestick. So, you know, if I have a bullish bias because I'm above the cloud, but the lagging span is trading below or inside price, I have to wait for that to change. So I really need to wait for the lagging span and price to make, well, they got to break out above this price area of resistance. So, you know, I've got to get up to here in the lagging span and in price action. So that's what I'm looking for. Stellar Lumens, XLM. That is, oh my God, that is a triangle if you've ever seen a triangle. That is a freaking symmetrical triangle. Like, hold on. That's funny. Yeah, that's that's weird. Holy cow, is this a diamond bottom? Oh, that'd be a stretch. Well, yeah, technically. That's not much of a slope, though. Yeah. Never mind that one. Anyways, hope you guys have had a good trade week so far. Hope you guys' week in general has gone well for you and your life so far. Thank you for being here today. For those of you Forex Lens customers who are watching this on the recording or live, I will see you tomorrow morning at 7:30 Central Standard Time as usual. The rest of you, I will see you tomorrow at the same time here at 1 o'clock Central Standard Time. And yeah, hope you guys have a great day, and we'll talk to you later. Bye-bye.